made, and this is Boom Bust. Here are some of the stories we're tracking for you today. First up, China's dumping U.S. debt, or so the headlines say. But are the Chicken Littles of the financial world getting ahead of themselves? We revealed the historical hysteria when it comes to foreigners buying of Uncle Sam's IOUs, as well as the real 800-pound gorilla sitting on the trading desk right over there. And 38 months after Dodd-Frank was passed, the bureaucrats are still fiddling around with the final rules that are supposed to keep your favorite too-big-to-fail bank under wraps. Bart Naylor of Public Citizen joins me to cast a skeptical glance. And finally, Bob talks with David Webb about how the financial industry gamed the system to legally take your assets, legally, even if fraud is committed. Let's get to the show. With the U.S. government shutdown still fresh, but slightly fading in the memory of most, the Treasury just released its monthly report detailing who's buying and selling U.S. debt. Since May 2013, China has shed $29 billion in treasuries, leading to headlines such as this by Bloomberg. China Treasury holding drops to 6-month low as yields rise. And then this one from the Associated Press. Foreign holdings of U.S. Treasury debt dipped to $5.59 trillion, fifth straight decline. And while a $29 billion drop does seem big, it's only 2% of China's total Treasury holdings. And since 2011, China has still added $123 billion in Treasury, billion with a B. Yet in 2011, 2.5 years ago, we saw this headline from CNN Money. China's holdings of U.S. government debt inched lower for 5th straight month. And our very, very favorite, China trims U.S. bond holdings for 5th month as debt approaches ceiling. Yes, that was from May 2011. May 2011, not this month, excuse me, last month. Now, here to shed some light on what exactly China is and is not doing, Bob English. Hello there, Bob.
So history certainly does rhyme.
It certainly does rhyme. There you go. Now, can you put these numbers into perspective? Who are some of the largest holders of U.S. debt? Sure.
We have a graph here. I came with a couple of graphs, but the first one shows the largest U.S. holders. And if we start with the 800-pound gorilla at the right, that is the Federal Reserve, and they're up to $2 trillion right now. And then if you see Japan, U.S. individuals, and China, and that's mainland China, all hold about $1.1 to $1.2 trillion. And then I've also included banking institutions in the U.S., which are weighed down to about $418 billion, and they've shed about 20% over the last year. In my mind, that could be the bigger story than China going on right here. But we'll get on to the next graph in a second.
Okay, that's interesting too. Now, what about the long-term trend with these big holders?
Sure. Going back to 2008, and this is the subject of our next graph, if we look at what China, Japan, and the Federal Reserve are doing, we can see that they've all pretty much steadily increased. And of course, the Federal Reserve is guided by QE 1, 2, 3 infinity. But we also see that China and Japan have increased over this same period. And to be fair, China peaked in July 2011, but they have risen steadily since about 1 year ago. So is the big story here that China is shedding its debt? I don't think it's going to do anything stupid, which would be to to shed a major portion of it. That would be clearly against its own interests. I'm much more concerned about the Fed's exit strategy. That's something we talk enough about here.
Quite a bit. Now, I understand this Treasury report, it's pretty volatile, and it changes substantially. The revisions are substantial. Can we trust it, is the question.
Well, in the current report, we're going back to August 2013. And from there, we have revisions that are going to come out, and sometimes these revisions are as much as $100 billion. It has to do with the methodology. China historically has bought not only through the U.S. primary dealers, but also through the United Kingdom. They have all kinds of offshore accounts. So, it takes a bit of time to be able to put these numbers in the correct historical perspective.
Now, this is something else. Also, China, they now enjoy a special privilege when it comes to buying Treasury debt.
Yes.
And this is from Reuters. This is kind of incredible. China can now bypass Wall Street when buying U.S. government debt and go straight to the U.S. Treasury in what the Treasury's first ever direct relationship with a foreign government. Now, the question, why would China need a direct line to the U.S. Treasury, and does this bring up any security concerns?
Very good questions. First of all, China, unlike Japan, say, they buy most of their U.S. Treasury securities through a single Chinese entity. In Japan, they have pension funds, the Bank of Japan, a lot of different people doing the same thing. So they don't necessarily need, and I'm talking about Japan, a direct line to the Treasury. Now, what China was doing before, and I was saying they bought through primary dealers, they suspected in the years coming up to 2009 that they were being front-run. In other words, they had orders so big coming in that some of these primary dealers, whether it's JP Morgan, Goldman Sachs, they were jumping in ahead of them. So they started buying stealthily on the side. Well, the Treasury didn't like that once it found out, because all of a sudden they would realize one day, well, China has so many more securities than we thought they did. So Treasury changed the rules, but at the same time, they gave China this special privilege, which is direct access to the Treasury Department. Now, your second question, does this raise security concerns?
Yeah.
Yes, it does. This story got very little play in 2012 when it came out, but the article in Reuters went to great lengths to point out that the Treasury said, yes, we are concerned about hacking, and we have made sure that this line to the Treasury is one way, and it only is used for purchasing Treasury bonds and not for any kind of market manipulation.
Kind of crazy. You know, do you think that it will open up to any other country? Maybe Japan, maybe.
Well, yeah, it depends. If you look at the largest purchasers of U.S. Treasuries, again, yeah, Japan is they kind of have a fractured borrowing market there. You know, maybe one of these other centers will come up, but the biggest purchaser, of course, is the Federal Reserve. And by statute, they actually cannot buy directly from the Treasury unless they're replacing existing treasuries that are maturing in its profile. So if something's running out and it matures today, they can buy directly from the Treasury. Otherwise, they have to go through these primary dealers. That in itself is there's a lot of graft that can go on there, because the Fed has to buy above market prices from these primary dealers, and then when it sells these securities, if it ever sells them, we don't know, it sells below market prices. So there's a built-in profit mechanism for the big banks, who are oftentimes these primary dealers, a select group that's selected to trade with the Treasury and with the Federal Reserve.
Bob, thank you, and I'm sure that we will be keeping a close eye on this, as it seems every 6 months or so we have a similar headline.
Yes.
All right, well, there you have it. We'll be tracking this and keeping you posted on all the latest. Joining me now to discuss all things Dodd-Frank is Bart Naylor, financial policy advocate for Public Citizen, an advocacy group here in Washington serving the people's needs in the Capitol. Thank you for joining me, Bart.
Thanks for having me.
Now, first and foremost, is Dodd-Frank being implemented in the way it was designed to be implemented?
Absolutely not. Dodd-Frank has 400 rules embedded in it. That is to say, the regulators, the FDIC, the Federal Reserve, have to take the statute, which sometimes is elegantly written in only maybe 10 or 12 lines, and to change it into the actual rules by which banks have to behave. It's basically like saying Congress says, drive safely, drive more slowly, and then the cops in Arlington say, all right, that means 55 miles an hour on the highway and so forth. Well, some of the rules are very important, and Congress said they need to be implemented quickly. 956 says don't pay bankers with structures such that they take excessive risk. That was supposed to be done in May of 2011. It's now October of 2013. No rule. There are roughly more than 200 rules that are fallow in violation of their statutory deadline.
Now, when do you think we'll see full and final implementation of Dodd-Frank?
Well, I am now in a long time. I don't know. So some of the rules are hoist by the fact that they are multi-agency. The Volcker rule, for example, has to have 22 separate people voting on it. 7 Fed governors, 5 commissioners of the SEC, 5 commissioners of the CFTC. It is unclear when it will be.
Now, Eugene Scalia, son of Supreme Court Justice Anton Scalia, he is known for being a, quote, absolute bulldog on Dodd-Frank and Wall Street's secret weapon. Question is, how much power does he really have? He is a lobbyist, and he's a powerful one, and he's attorney as well. But how much power does he really have, and how much damage has he done?
He's done enormous damage in bringing cases based on any little nit he can find. His biggest success is to point out deficiencies in what's called cost-benefit analysis. Now, agencies don't really have to do a cost-benefit analysis, but they do. And he ran into a judge, a guy named Ginsburg, who has famously failed to make the Supreme Court because he was partaking of some controlled substances. But he wrote an opinion, it's called Business Roundtable for short, which said that the cost-benefit analysis of an SEC rule, we can go into some detail, was deficient and threw it out. That not only freaked out the Securities and Exchange Commission, which stifled all rulemaking. You can watch the curve of progress, and it just hits a wall after that decision. It frightened all of the other agencies that they would do all this work, and their work would be ground to a halt because Scalia intersected with a Republican-appointed judge and stopped the rule altogether.
So as an advocate for Wall Street, you'd say that he's one of the better ones?
He is one of the better ones, yes, indeed.
A scarier one for
right. He even brags on his website, Gibson, Dunn & Crutcher. You can link to an article written about him, which says, if you want your rule stopped, there's one-stop shopping with Eugene Scalia. I'm paraphrasing, but that's the point.
Wow, quite a bit of self-promotion there as well.
Yeah.
Now, can you speak to us about the quote, holes in the Volcker rule? It's our understanding that the big banks are still allowed to engage in proprietary trading. Is that true?
They are by the fact that the Fed and the other regulators have not done anything, can be in violation. That is to say, they can do proprietary trading. I'm an Episcopalian, and we invent euphemism. That's called ripping off your customer. Okay. That's what prop trading is. It is buying low and selling high to people who don't know any better, and they are your counterparties. Banks are not allowed to do that, but they are doing it as we speak.
Wow. Now, you're outnumbered as a lobbyist when it comes to Dodd-Frank, and the big banks, they have many more lobbyists on their side. The banks, they didn't win, though, in the sense that Dodd-Frank is a law. Yes, it's taken a long time. It's been a slow and painful route. But do you see this as progress at all from your perspective?
Well, Martin Luther King made famous the phrase that the arc of history bends towards progress. So I need to believe that we are making progress. I can't get out of bed hopeless every day. Yes, we're outnumbered 150 to 1 in terms of lobbying. Yes, Wall Street spends roughly $2.5 million per day lobbying. Yes, they have bought Congress. Yes, Dodd-Frank isn't so much Wall Street reform, but the restatement of existing law that Wall Street let us have. But no, I think America has not forgotten that Wall Street done them in. Wall Street it polls pretty much near Congress in the opprobrium, in the low esteem held by Americans. So I think to the extent that one thing we as public citizens have is the right to vote, ideally that will be remembered come November when you get to send the right person to Congress. We've sent people like Elizabeth Warren, way to go us, and ideally we will send other like-minded people.
Bart, thank you for joining me, and please come back. We have many more questions we want to ask you about offshore and how that works with some of these banks too, but we're going to have you another time as well.
Thanks for having me.
Running out of time now. That was financial policy advocate Bart Naylor. Coming up, how did the financial industry change the rules to make bankruptcy a game of musical chairs? David Webb has the answers. Then forget football field-sized yachts. The new billionaire trend for high-performance submarines is all the new rage. Plus, we couldn't help but poke a gaping hole in Alan Greenspan's memory of his Fed days. Stay tuned. It's coming up.
5 seconds. And over the mic is all fuel and go.
Did you know the press is the only industry specifically mentioned in the Constitution?
Stand by.
That's because a free and open press is critical to our democracy.
Track Alpha. Roll Alpha.
In fact, the single biggest threat facing our nation today is the corporate takeover of our government and our press.
Stand by, camera 1.
We've been hijacked by a handful of powerful transnational corporations that will profit by destroying what our founding fathers once built up. I'm Tom Hartman, and on this show, we reveal the big picture of what's actually going on in the world. We go beyond identifying the problem. We try to fix it. Rational debate and a real discussion of the critical issues facing America.
Stand by on camera, go.
Ready to join the movement? Then welcome to the big picture.
I'm the resident, and I I'm sick of corporations trying to convince us to consume, consume, consume. I'm sick of bankers trying to convince us all that life is all about money. And I'm especially sick of our politicians writing the laws and regulations to protect corporations and bankers while they hang us out to dry. There is just too much crap in today's society. Let's talk about that.
Oftentimes in history, the most epic of changes stem from something seemingly insignificant, such as the assassination of an Austrian archduke. Now, in the realm of the finances, the entire concept of ownership with respect to financial assets has slowly shifted over the last 4 decades. Now, these changes culminated with bankruptcy reform that was enacted just before the financial crisis. How convenient. According to David Webb, founder of Origin Investments, the sad, startling fact is this. Any securities you bought and paid for and hold in a brokerage account are no longer your private property, at least not the way you think about it. So I first asked David about how we got to this state.
There's no coincidence, really, that these changes have come about with the growth of the derivatives complex, so that these pools of client securities could be set up structurally so that the account providers could borrow client assets out of this undifferentiated pool and pledge those as collateral to underpin the derivatives complex. And so we have what's happening from a macro standpoint is, of course, massive amounts of liquidity are being added to the system to deal with an underlying situation that is really a global deflationary depression now. And that liquidity is causing an explosion in paper assets that have now reached a scale that there can't possibly be enough collateral backing. So derivative instruments, for example, are over $700 trillion, 10 times the size of global GDP. Many years ago, the derivatives industry would suggest that people were, their concerns were unjustified because derivatives would net down to zero in theory.
In theory, but and what happened in practice, and what's a concrete example?
What we've seen is that the industry actually did not really believe what they were saying, because they've been working since the 1990s to assure that they will have collateral backing for these derivative contracts, and that preference will go to the secured creditors.
Now, surprisingly, not even the introduction of fraud means that customer assets will be returned as long as that fraud wasn't conducted with intent by the final holder of those assets. So just think MF Global. I next asked David how this could be.
The way the law works, if there is fraud on the part of the account provider, that absolutely does not interfere with the secured creditor's ability to take those assets.
So just to put this in perspective, we can have fraud at one level, but at a different hierarchical level, if there's no fraud, the collateral or securities posted by the customer can still be taken.
Well, let's say the way it's set up, it's virtually impossible to show fraud.
Okay.
That's really the purpose there. It is clear, there's a document in which the Federal Reserve responds to a questionnaire from the EU Legal Certainty Group. This was received early in 2006. And the Legal Certainty Group was working along the lines of conforming EU law to the American model. In other words, to assure legal certainty for secured creditors. So they were really looking to the Fed to say, how should we do this? So it's a very illuminating response. In which the Fed makes it clear there is that if there's fraud on the part of the account provider, that will not limit the secured creditor's ability to keep the assets, but also that if fraud could be proven on the part of the secured creditor, essentially collusion in this, that is the only exception. But in each insolvency we have seen through the crisis, that has not been possible to show. In the case of MF Global, for example, J.P. Morgan was essentially the prime broker and the custodian.
Yeah, they had a number of hats on their head.
The custodian for client assets. They knew all about it, and they were a little worried about that. They knew all about it. And would that be a problem in terms of being able to demonstrate fraud? So in the final days before the insolvency, they pressed the management of MF Global to give them a written assurance that these were not client assets when they knew full well they were client assets.
And it was Lori Ferber, formerly of Goldman Sachs, who was the general counsel of MF Global. And Ms. Ferber stalled J.P. Morgan throughout the weekend. So one would think Mr. Diamond & Co. should have known full well whose assets those were. In other words, customers. Anyway, it's time for today's big deal.
Who doesn't love movie memorabilia? Elon Musk, the brains and bronze behind, there we go, some lights. The brains and bronze, like we were in a real theater, Bob. Yes. Brains and bronze behind Tesla and SpaceX. He sure does. In fact, he likes movie memorabilia so much that he shelled out $1 million for the Lotus-based submarine car from the 1970s era James Bond film, The Spy Who Loved Me, which you just saw, and he plans to turn the prop into a working submarine car. Now, as you just saw again in the clip, the original James Bond, not Sean Connery, fact, it was Roger Moore, and he drives the car off a pier to evade attacking helicopters. The wheels retract, fins emerge, and with the touch of another button, a rocket launches, blasting those choppers that were chasing him right out of the sky. Blammo. Now, Musk was apparently disappointed to learn that the prop didn't actually do this. Now, Elon Musk told NBC News, quote, it was amazing as a little kid in South Africa to watch James Bond in The Spy Who Loved Me drive his Lotus off a pier, press a button, and have it transform into a submarine underwater. I was disappointed to learn it can't actually transform. What I'm going to do is upgrade it with a Tesla electric powertrain and try to make it transform for real. Woo! Now, Bob, with an estimated fortune of $6.7 billion and the engineering minds behind Tesla, do you think that, Mr. Musk is more well-placed to make his childhood fantasy come to fruition than most?
Well, money helps, doesn't it? And also to have an active imagination. I think some of the most exciting developments in terms of exploration, be it oceanic, or even in space, are done by people with entrepreneurial ambitions. Richard Branson, he hasn't gone into space commercially just yet, but I keep crossing my fingers that he'll get there.
Yeah, he has his own company now.
He does have his own company. Is he taking flights, and are they going back to the Caribbean in his little habitat there? I don't know yet. But
I hear they're inner space. They haven't hit outer space yet.
Yes.
Which is
So anyway, all these things are on the horizon. So I think we need to draw a line. We criticize the financial billionaires sometimes, their gains are ill-gotten, but these tech billionaires, if somebody wants to deck out their their 787 or build an underwater submarine, go for it.
Who are we to judge? And who are we to judge? Speaking of submarines, it seems like it's kind of taken the place, you know, for the luxury yachting set, it's now the luxury submarine set, and they can go to incredible places. Check out this picture. These things are comfortable, and, you know, leisure time yachting, it's a thing of the past for the super rich, no?
Well, it could be. I think it's pretty exciting. We actually know little about, I would say less about the great depths of the ocean than we do about certain places in outer space, even our own solar system. So if these billionaires want to go down there and explore, again, my hats off to them.
You have a good time down there. Now, do you think the industry is going to be similar to the business model, to that of the yachting industry, where it's just a couple of big players and not much room for growth? I mean, the technology and engineering.
Well, they can always get bigger, right? The vessels keep getting bigger and bigger. We'll just have a giant submarine that stretches from the coast of Miami, Florida, or Key West all the way to Cuba. I don't know. It's up to them. It's a free market in terms of what they want to build and what they can buy.
Now, surprisingly enough, this brings up another issue of both smuggling and immigration. Get this, this is incredible. Recently, a high school educated drug smuggler built a fleet of submarines in the middle of the jungle to ferry cocaine from the United States to Colombia. Now, here's the question. Who will oversee or regulate this new aquatic world? Does this fall under maritime law? Whose jurisdiction is this? No?
Well, you know, once you get within a certain number of miles within somebody's coast, the local authorities, whether it's feds or state or whomever, have jurisdiction over this. Now, this has been going on for a long time. The various drug cartels have been building submarines, and they even compete against each other. So there's an underground competition that we haven't quite seen play out among the billionaires, but in the actual black market, which is pretty interesting.
Perhaps their black market will no longer be black in the sense that they can sell their little subaquatic machinery to billionaires now. There seems
Let's
to be a
make the
market
entire
for it.
industry vertical.
Now, switching gears a little bit in a Lotus, no, that's a joke. Former Federal Reserve Chairman Alan Greenspan is making the rounds with his latest book, The Map and the Territory. And this has provided an opportunity for some to challenge his record as Fed chairman. In a recent interview, Greenspan claimed total surprise at how big subprime had gotten by 2005. He said he was told very little of the problem and that the Fed didn't see anything, quote, big. Now, we did some digging into the Fed's own archives, and at a June 2005 Fed meeting, one of Greenspan's own Fed governors told him this: when you look at the mix of products, more of the mortgages are subprime products. So what I am concerned about from a liquidity perspective is the lack of discipline relative to previous periods. Bob, does this surprise you? Is Greenspan a liar?
It doesn't surprise me at all. I will say that Greenspan once denied the existence of these very transcripts that we are now reading. They did not become public, and they're only public on a 5-year rolling basis or so. They only became public after the financial crisis and after there was significant heat on the Fed. So Greenspan has egg on his face, and he might just be too old to even realize it.
Woo, below the belt, but I like it. I like it. Okay, that's all for now, but you can see all segments featured in today's show on YouTube at youtube.com/boombustrt. We also love hearing from you, so please check out our Facebook page at facebook.com/boombustrt. From all of us here at Boom Bust, thanks for watching. See you tomorrow, same time, same place.